Okay, so you've got 100 bucks. What if I told you that's all you need to start building some serious wealth? I know, it sounds a little crazy, right? But stick with me, because that's exactly what we're going to break down in this explainer. Let me ask you something. Have you ever thought, you know what, I'll start investing when I have more money? Yeah. Sound familiar? Maybe you're waiting for that next promotion, or for life to just calm down a bit. We've all been there, for sure. But here's the honest truth. That one little thought, that I'll do it later excuse, that is the single biggest thing that stops most people from ever building any real wealth. It's a tiny delay that, trust me, costs you big time down the road. And that's our mission for the next few minutes. We're going to completely shatter that mindset. I'm going to give you a super simple step-by-step plan to take that first 100 bucks and put it to work. All right, first things first. We have to bust this huge myth that you need to be rich to invest. Seriously, that's ancient history. I mean, think about it. 20 years ago, yeah, you needed a pile of cash, you had to call up some stuffy broker, it was a whole ordeal. But today, yeah, you can literally start with a single dollar right from the phone in your pocket. The entire game has been flipped on its head. And check this out. Want to see the real power of starting small but starting now? If you just invest that same $100 every single month with a pretty average 6% return, in 30 years, you could be looking at nearly $100,000 from just 100 bucks a month. That's the insane power of just being consistent. So you see, the real wall here, it's not the money. It's that little voice in your head telling you it's not enough. So you ready to shut that voice up for good? Perfect. Now, I know you might be tempted to rush off and download an investing app right now. But hold on, let's pump the brakes for just a second. There are two things you have to do first. These are non-negotiable, and skipping them, well, it can really come back to bite you. It's a really simple two-step pre-flight check. Number one, you got to deal with any high-interest debt. And number two, you need to know your why. Like, what's the point of all this for you? Look, the math here doesn't lie. If you've got a credit card charging you, say, 20% interest, and you're hoping to make maybe 7% in the market, you're literally just digging a deeper hole. Paying off that debt is the best investment you can make. It's like getting a guaranteed 20% return on your money. You can't get that anywhere else, especially not the stock market. And that why? What is it? Are you doing this to retire comfortably someday? To buy a house? Or is it just about having that freedom to not worry about money? Knowing your big goal is what's going to keep you going when the market gets a little rocky. It's your North Star. Okay, so the prep work is done. Your mission is clear. Now for the fun part. You've got that crisp $100 bill ready to go, so where do we actually put it? First things first, you need a place to put it. It's called a brokerage account. And I know, that sounds super formal and intimidating, but don't worry. All it is, it's like a bank account, but for your investments instead of your cash. Just look for one that has no minimums to start, super low fees, and an app that doesn't make your head spin. All right, account's open. Now you've got some really solid choices for that first 100 bucks. We're going to look at the top 3 for beginners: index funds, fractional shares, and these things called robo-advisors. For my money, the best place to start is an index fund. Here's why. Instead of gambling on picking the one next big company, you buy a tiny slice of hundreds of companies all at once. It spreads your risk out. It's like, instead of betting on a single horse to win the race, you're betting on the entire racetrack. And you know what the crazier part is? These super simple, low-fee funds almost always beat the pants off the fancy, high-paid Wall Street pros over the long term. Okay, but what if you're like, I really want to own a piece of that huge tech company everyone's talking about? This is where fractional shares are an absolute game changer. Let's say one share of that company cost $400. Well, with your 100 bucks, you can buy a quarter of a share. You get to own a piece of the pie and benefit from its growth without needing the full price of a ticket. It's honestly one of the biggest innovations for small investors. Okay, listen up, because this might be the single most important thing we talk about today. Investing isn't about this one-time $100 thing. Nope. The real magic, the secret to building wealth, is about what you do next month and the month after that. It is all about the habit. And the secret weapon for building that habit, it's a beautifully simple strategy called dollar cost averaging. You can forget about trying to guess if the market's going to go up or down. That's a fool's game. All you do is invest the same amount of money, say 25 bucks, on the same day every single month. Set it and forget it. It takes all the emotion, all the stress right out of the equation. Just think it through for a sec. Some months, when prices are high, your $25 buys you a few shares. But then, on the months when the market dips and everyone's panicking, your $25 buys you more shares for the same price. It's like getting a discount. Over time, it all averages out, and you've sidestepped the impossible game of trying to be a market genius. All right, let's pull all this together. Let's create a simple playbook for you, the new Investor's Code. Just 5 simple rules to live by as you get started. Rule number 1, start before you feel ready. Because guess what? You'll never feel 100% ready. Rule 2, diversify from day 1. Good news, an index fund does this for you automatically. Rule 3, keep your costs low. This is a big one, we'll come back to it. Rule 4, ignore the noise. The day-to-day news, the talking heads on TV, it's just noise. And finally, Rule 5, never stop learning. Stay curious. Okay, let's zoom in on rule number 3 about keeping costs low. When you look at a fund, find the expense ratio. You want that number to be tiny, like under 0.2% if you can. It sounds like nothing, but the difference between a 1% fee and a 0.2% fee could literally cost you tens, even hundreds of thousands of dollars over a lifetime. It's a huge deal. So let's bring it all home. The big takeaway here is this. You do not need to be wealthy to start building wealth. You just need to start. The tools are there. They're easier to use than ever before. The plan is right in front of you. The only missing piece of the puzzle is you. So we've gone through the why and the how. The rest is on you. So I'll leave you with this question. What's your very first step going to be? Are you going to tackle that credit card bill, or are you going to open up that brokerage account? Today? Your move. The clock starts now.